Well, last year saw most commodities finish below their January starting price, and with the global economic growth outlook showing minimal upturn, will it be more of the same in 2015? Well, Bevan Jones from the Tebe Ventures joins us now to help us answer that question. Bevan, thank you very much for being here. And I know we are in the realm of speculation, but I suppose one can look back at where the cycle is. We had a commodity super cycle. Everybody was quite excited about all these prices heading. They all seem to be heading in one direction, and that seems to now have stopped.
Yeah, I think the commodity super cycle previously in 2007, 2008 was really China driven. But this time around, China is drowning in oil, they're drowning in iron ore, etc. So I think what's happened now is obviously this is very much a US-led production crash that we've seen, with Saudi refusing to cut production, leading to a glut of oil in the world.
Yeah.
Structurally, it's very different from where we were previously, the last crash. And we're seeing speculation, but as you say, we're definitely seeing at the bottom of this. Yeah.
And a lot of people don't know where the bottom is going to be.
Well, I think you have to look at the marginal cost of production for a barrel of oil. And if you look at US oil condensate from the shale gas drilling, you're probably looking at $60 to $70 for that marginal cost, and those are the people that the Saudis are trying to drive out of the system. So you would expect that, given some time, the market would revert to that marginal price, which is roughly where you would extrapolate a line anyway from about 2005.
All right. Okay, let's come to South African commodities. We are, of course, very concerned when we saw what happened with the gold price. We've gone quite down. Let's start with gold, and then we'll get into platinum as well. What's your view on gold? It looks like at the moment there's a bit of safe haven buying, but I don't know how long that could last.
I think the era of safe haven buying for gold is probably past us. I think gold has always been an interest rate trade, and what you're seeing is that with the dollar strengthening, most commodities are obviously quite weak because they're priced in dollars. So most traders are buying the rumor that quantitative easing is going to happen, and then they will sell the fact when it actually does stop and interest rates start rising again. And then you would expect the US dollar probably to weaken, conversely to what most people would expect. And then you should expect gold to perform. So I think the second half of this year we'll see gold and platinum starting to perform. Obviously they're benefiting a little bit at the moment from the safe haven impact, but that won't last that long.
Talking then about another of our precious metals, platinum, it underperformed last year despite, some of these supply side issues like the strike that we saw here in South Africa.
Yeah, I think with platinum, the problem there was that there was just too much global supply. There was too much stock above the ground, and therefore there was a huge safety net, and that even with strikes, etc., it didn't really impact the supply of platinum. And the miners did their best to ensure that supply was kept up.
Yeah.
So we didn't see the price falls that many were expecting. But I think, again, platinum stands to benefit structurally from the fact that it's used as a catalyst, especially with environmental purposes, and you're seeing that happen. China is going to become the world leader in renewables and environmental technology, and I think platinum should benefit from that.
Iron ore had a torrid second half last year. Was that largely because of the pullback in China?
Yeah, partly. China's obviously decided that they're going to now come and put their steel plants in South Africa. So someone like Hebai Iron and Steel, looking to, instead of polluting in China, they're now coming to South Africa. But it's good for us because it's going to create jobs, and it's obviously they use the ore from Phalaborwa, which they were previously shipping to China. Now they can use it locally. So we're going to be beneficiating. We're going to be creating low price jobs. So that's all good news. But iron ore really was a story of oversupply again. BHP, Vale, Rio Tinto, the iron ore majors, just really flooding the market, also hoping to drive out the marginal producers. And to some extent they succeeded in that. And structurally those markets remain in oversupply.
And what's happening in the coal market?
Well, thermal coal for power generation, again, complete oversupply. I think with coal, it's becoming a bit of a sunset industry, and we thought that 20 years ago, but I think now it's actually happening because, as I say, countries around the world are moving away from coal-powered, dirty power generation to gas. There's a huge amount of gas. The spark spread for gas is now looking quite attractive as opposed to the dark spread for coal. So I think you're seeing people move to gas. Coal is really the dirty cousin, and nobody really wants it. But of course, in South Africa, we have a huge,
We're building
huge need for coal.
coal-fired power stations. But can we absorb that domestic that production?
Well, certainly, with potentially coal potentially being declared a strategic asset, although there's no reason to declare coal a strategic asset because you can't export it for love or money at the moment. So Eskom really has a bit of a free gift in terms of that, and we really should not expect to see coal price rises on the Eskom side. There is, of course, another use for coal in cement plants and sugar mills, etc., and it's a much higher price that they get there, but it's such a small market, it's not really relevant.
All right, we'll leave it there. Thanks for your time. Bevan Jones is CEO of Tebe Ventures. Leading UK retailer Tesco is taking drastic measures in order to start making profit again. It's planning to trim costs and sell off assets in order to fund lower prices.
In its 95-year history, Tesco has never reported 4 consecutive profit-loss forecasts, and it's for this reason that CEO Dave Lewis is putting high expenses at the company to the sword. Tesco wants to halve expenditure for the next year to £1 billion and cut annual costs by £25 million. Lewis is also ridding the retailer of its non-profit-making assets like its broadband and Blinkbox video streaming service.
I think the plans are pretty radical, and they need to be. I mean, I think in terms of approach, there can be no sacred cows. I think the only sacred cow is the UK grocery business. Everything else is under review.
After 2 decades of uninterrupted growth, Tesco lost its way when it became distracted by overseas expansion. Shares were up 5% in early trade as the market welcomed initial moves to turn the business around.
It's a sad fact of life that I think when a CEO announces a closure program, shareholders seem to like that because it shows that the CEO is getting serious. But I think it's still too early to call time on the fact that we are getting a little bit of a turnaround story in Tesco's.
Tesco might have to do more than slash expenditure costs as it also battles sales losses to German discounters Lidl and Aldi.
South Africa's economy is expected to grow at around 2% this year, but one of the biggest hindrances to that growth could be labour unrest across various sectors. So for a look at what to expect in the labour market in 2015, we're joined by Mamokgethi Mulupiane from Creative Voodoo. Mamokgethi, thanks for your time this evening. 2014 was strikes and more strikes. That's kind of one of the big themes of that year. What are we expecting in 2015?
Well, 2015, it's a year that is going to be either a make it or break it year in terms of labour, because the dust is still settling within what had transpired at COSATU, and we know that the NUMSA is currently had formed a united front, and so they are planning to roll it out. We will see how that plans out. But in terms of strike, in the platinum sector, you would recall that the employers and labour signed a 3-year agreement, meaning in 2015 there might be less strike in the platinum sector. However, in the gold, negotiations started late last year and they are not yet concluded. So we do not know what is going to happen there. It's still a stronghold of NUM, but AMCU has made inroads into it. So again, it is a point to, it's an industry to, a sector to watch how it will unfold. We know it negotiates through the Chamber of Mines, very structured, but of course we have seen in the past that things have changed.
That collective bargaining isn't what it used to be.
Indeed.
Right? Now, the public sector is of course one everyone's watching, because we've all been told tighten your belts. We've seen with the budget that the money's simply not there. What are the chances that the government is going to be able to convince public sector unions to actually take inflation-related wage increases?
Very slim. However, within the politics of the alliance partner and the alliance partnership, and keeping in mind that the faction within COSATU that has power at the moment is dominated by the public sector union that has publicly and has so far aligned itself to the politics of the current ANC and government. It might be a tricky sea to navigate. However, we might expect them to eventually settle for whatever that the government is going to put in place, and there might be a compromise between the two parties. I do not see the public sector going into strike. However, if they were to go, it would be going against the flow of what has been happening in the politics of COSATU and government and the ANC.
And let's talk a bit about the politics. I mean, what are the implications of what has happened with COSATU on workers on the shop floor?
They have, for now, seemed to have sidelined issues of workers, meaning issues that workers are bread and butter issues of workers. The thing that makes COSATU what it is are not paid attention to. Instead, it is the politics that is playing out in the field. That, if we are to look at 2014, they have lost 2014 where workers' issues are concerned, because they were busy dealing with internal politics of their own happenings. And will they recover that? We do not know. However, we have seen that even though public opinion might suggest that workers are unhappy about what is happening, as to whether they would leave or would join the United Front that has been launched or formed, it's another matter. But it has put a dent on COSATU in terms of how do we proceed moving forward. They admitted themselves at the beginning of this year to say, we will try to make 2014 the year of paying attention to workers' issues. Who would have thought COSATU would be saying something like that?
It should be self-evident, right?
Indeed.
It should be self-evident. Now, just bringing in all the different stakeholders, business, labor, and government. Labor in Indaba, it was meant to deal with the hostilities in our labor relations. Was it just a talk show?
It seems it was, for nothing has come out of it. But then you would recall that perhaps it would be premature to say that it happened towards the end of the year in November. We would now look towards the Ministry of Labour to see if what had been discussed at the Labour in Indaba, they are implementing it, they are moving forward. Two key issues came out of there, the minimum wage and to re-look at the Labour Relations Act as it is. And those key issues are very key in terms of workers' matters and issues that affects workers on the shop floor. And COSATU has been blindsided by its own dealings, so it has not been paying attention to that. So what we would be looking out for throughout 2015 is to see what is going to happen about minimum wage, what is going to happen about the Labour Relations Act, and what is going to happen in terms of collective bargaining in the mining sector.
All right, good place to leave it. Thank you so much for your time. Mamokgethi Mulupiane is Labour Analyst with Creative Voodoo. Our daily question and answer feature is up next. Stay with us.